And then I got a call. I was in my office and I heard the board member, and it was very echoey where they were. They were in the courthouse. I asked where they, like, hey, where are you? We're in the Orange County courthouse. And they're like, yeah, we need to file a D&O claim. I'm like, okay, what happened? And they're like, well, we just got out of court and we lost. And I'm like, lost what? And they're like, yeah, we just got a demand for like $300,000 against the association. We lost in court. We need to file this claim. I'm like, I mean, it's going to be denied. It's a guarantee it's going to be denied. Yeah. I mean, that stuff, should have been reported, 18 plus months ago, and you guys have been fighting it this whole time.
So Phil and I were just at CAI, Community Association Institute Law and Insurance Seminar in San Diego. And this next one was an interesting case study. And it was on a directors and officers. Yeah. So what constitutes a directors and officers incident that should be reported?
Yeah. So the D&O claims are always the worst. I mean, those are the ones absolutely. You want to err on the side of caution on the most. So, when you think of a D&O claim, it's usually a demand for money or for you to do something. So bodily injury and property damage, you're back to that liability claim. But if it's a demand for money or for relief or something, and it's a written demand that comes in, it could be an email that an owner sends to the board saying, I demand you do this. Technically, that's getting potentially into the D&O policy.
Yes, it is.
And the way the D&O policy works is that if a claim is not reported within, let's say, 90 days of that policy expiring, it's kind of gone. Like you're losing your ability to go back into it, assuming you've been served and haven't done anything for it. And I say served, but noticed of a claim, like in that scenario, it's just a lot trickier than the property and liability. There's more of a hard line on it, and then there is more of usually the gray area of what that is, because it's not an attorney necessarily. It could be an owner.
That's right, it's from a owner. So yeah. I just had this come through on Friday. The scenario is the property manager emailed me and said, Negar, we have a situation. So what had happened was, as part of their board packet, there was the financials, and it showed the list of unit owners that were delinquent as part of the board packet. One of the board members, without consulting with anybody else, the property manager, the other board members, blasted out the board packet to the community. Nobody knows if it was on purpose. There doesn't seem to have been any ill intent, but those owners that actually read the email and looked at the attachment saw the names of those that were delinquent. So one of the delinquent people emailed the board and is demanding an apology. You sent private information. You sent my name. You showed that I was delinquent. I demand an apology. I've been harassed. So the property manager reached out to me, and I'm like, yeah, we haven't noticed the D&O carrier. Like that they're demanding the board apologize. And so that is something that I, as an agent, feel like I need to notice the carrier, because this could blow up into something bigger. There's personal information, financial information that should not have been disclosed to the community.
Yeah, I had one some years ago where a siding contractor was doing work for an association, and the siding contractor sent them the final bill, and the board denied it. They were like, you billed us wrong, we're not paying this. And so they sued them for breach of contract. So breach of contract's a big D&O type claim. And you had the vendor suing the association for breach of contract. The association felt they had such a good case.
Oh my God, I remember this.
Their attorney working it for them. They were taking it. They were dealing with it. And so I had no idea this was going on for the best part of 18 months. And I talked to this board routinely. And then I got a call, and I was in my office, and I heard the board member, and it was very echoey where they were. They were in the courthouse. I asked where they, like, hey, where are you? We're in the Orange County courthouse. And they're like, yeah, we need to file a D&O claim. I'm like, okay, what happened? And they're like, well, we just got out of court and we lost. And I'm like, lost what? And they're like, yeah, we just got a demand for like $300,000 against the association. We lost in court. We need to file this claim. I'm like, I mean, it's going to be denied. It's a guarantee it's going to be denied. Yeah. I mean, that stuff, should have been reported, 18 plus months ago, and you guys have been fighting it this whole time. And if you think about it from the carrier's perspective, it makes sense, because the carrier doesn't want you guys, when I say you guys, but the association or the association's counsel, running with something and potentially jeopardizing the cost on that claim that the carrier is going to end up being responsible for.
Because the carrier is the one paying it.
Yeah, the carrier is the one paying. So like, if ultimately the carrier is on the hook and you go ahead and take 15 months to mess around with something, and now it's become a huge problem, they could have settled for 30 grand and now it's 300 grand. Of course the carrier is going to be like, I don't want any part of that. Yeah. That's why then you get stuff reported timely, because you don't want to avoid some massive, claim reverberations from.
So that's directors and officers. Again, even if a whisper of a claim that's going to happen, an incident occurred and someone's angry, a homeowner's angry,
Talk to us. Be more aggressive.
But that's a notice. Like that's something that we don't want to mess with that on directors and officers policy. Lastly, and this is not one we get very often.
Yeah.
Thankfully, it's crime. And crime,
this is going to be theft of a property manager, stealing funds, or a third
stealing
party
financial assets, not stealing the chaise lounge chair by the pool.
Yeah, no, exactly. This is your funds of the association.
Yes, funds
so
of association.
Operating account, reserve account. Someone figures out how to get in there and is taking funds from you. Could be a board member, could be property manager, could be third party vendor. But when you uncover that theft, you need to report it pretty immediately, because if you don't, and then you wait till that policy expires, and then maybe on the next policy you try to report it, you just want to be careful. I mean, some of these policies will have conditions where if you don't report it by a certain amount of days after the policy's over, you can't go back on it. If the same carrier is in place, there's sometimes things you can do, but a lot of times that stuff might change.
So it's when you become aware.
Just when you become aware, just tell what I would say is, like, don't hesitate to tell us, talk to us. We get calls all the time from our clients. Send us an email, give us a call, be like, hey, this happened. What should I do? And we'll step you through this. It's not like it's something you need to make these decisions yourself. But I think the point of this, episode was just kind of say, listen, property claims, depending on the severity, we can be a little more lenient. Liability, the same thing. D&O and crime, not so much. We're more aggressive on those.
Well, thank you, Phil. And thank you to those that joined in for today's show of Policy Party. I'm Negar Sharifi, joined by Phil Masi.